Bitcoin has just experienced one of its most brutal corrections in history. So we need to analyze this capitulation event to see if this could be forming a major market low. So we'll get straight into it here on the MVRV Z-Score 2-year rolling chart. And as you can see, this most recent sell-off we've had in the Bitcoin price action, as soon as we broke beneath $100,000, we've just immediately dumped to the low $80,000 region. And looking at the MVRV Z-Score on a 2-year rolling basis, we can just see it has been one of the most brutal sell-offs, one of the quickest and most severe capitulation events we've maybe ever had in Bitcoin. Now, this 2-year rolling chart can slightly warp this data, of course, given the fact it's based on the previous 2 years of price action, and volatility over the past 2 years has been very much diminished, very boring price action. We just have these big, massive exponential moves to the usually upside, most recently the downside. And of course, this is resulting in some fairly skewed data. But if we just look to some other data points as well, it's not just this is signaling that Bitcoin is very much oversold. If we just go over to TradingView here, what we can see is looking at the Bitcoin Crosby ratio, which is this chart that we're currently seeing now, we can see we're very much in the buy area territory. Now, it's very rare that actually on the daily time frame we reach oversold levels this severe. We can see during this cycle, we've actually only hit it at the bear cycle low point, and then following that on 3 separate occasions prior to this most recent sell-off. So this is very much an area where I think Bitcoin could very much be considered at a discount. Of course, this doesn't mean we can go lower, and we'll look at some more macro charts in a minute just to actually look at the case of whether we could be forming a major bear cycle lower, whether this could be kind of the springboard to take us into bull market territory. But overall, I think regardless of what the more medium to long-term outlook is, over the short term, I could very much see Bitcoin, if not massively bouncing from here, at least having a period of cool off. If we look at this metric here, which is the squeeze potential, which is something we actually cover fairly regularly on our site subscriber industry report, weekly analysis pieces, which looks at the potential for Bitcoin to have a more long-term and sustained directional move. We can see this is at the bottom, which is essentially looking like the gas tank for Bitcoin. How much gas do we have to actually propel Bitcoin in these big exponential moves? And the fact that this is the bottom, like we can see in previous instances, usually signifies that we're due a little bit of a period of choppiness and consolidation to allow new capital to flow in, allow Bitcoin to set a new foundation and a base. But another metric we can look towards, which is another one we cover on the weekly site subscriber pieces. And just a little note, if I'm not sounding great, I'm not feeling on top form, I think it's bear market fever, just making me feel a little bit under the weather, but still loving making these videos, still lots of fun. But what we can see looking at this metric, which is the retail stablecoin demand, which is essentially looking at the dominance and the change of strength in dominance of stablecoins compared to the rest of the cryptocurrency markets. This has entered extreme undervalued territories, which essentially indicates almost like a fear and greed index. People are extremely fearful, but rather than just checking social sentiment, for example, we're actually looking at where people are putting their money within the markets. This is almost like a monetary fiscal fear and greed index, because when people are flooding into stablecoins, these safe haven assets, out of crypto markets, out of these more volatile speculative plays, this usually indicates genuine capitulation in the market. And again, it's something we rarely see throughout Bitcoin markets. I was going to say bull markets, but we're not really in bull market territory anymore. But we can see throughout this cycle, it's been a fairly rare occurrence to see these signals actually play out and occur. We can see throughout the entire 3 years, the last few years, that we've really seen Bitcoin in an upward trend. Every time this has occurred, it actually signified a pretty major low and turning point in the Bitcoin price action. Although, like we can see in the previous Bitcoin bear market, even though we did have multiple of these occurring, they didn't signify immediately the Bitcoin bear cycle low, but they did indicate that we did have a brief period of consolidation following this. On a couple instances, it actually resulted in a few weeks, even a couple months of more positive price action. So I do think that we are at a period, like I said, where Bitcoin could be considered at a discount. If you just go and invert the chart here, we've almost had this exponential price rally that we were hoping to see to the upside, but unfortunately it has been to the downside. But if we just go back over to Bitcoin Magazine Pro here, what we can see is if we look at just some more of the supply and demand economic points that we can actually base a lot of our charts off, such as the long-term holder supply, we can see recently we've had a monumental sell-off from long-term holders. Now, I will put a little asterisk next to this because as I planned this video, I was like, wow, this is one of the biggest sell-offs we've ever seen from long-term holders. But it did seem a little excessive, and it turns out that a fair few 100,000 of these Bitcoin transferred from long-term holders was actually an internal Coinbase migration. So we do need to put a little asterisk next to this. However, what we can see is looking at something like the Coin Days Destroyed, which doesn't just look at individual one-day basis points. This is actually over a 90-day moving average. We can see that this was very much trending heavily to the upside to begin with anyway. And as we can see, when there's a huge amount of long-term holders who hold a significant amount of Bitcoin transferring their coins, like it has done on multiple times in this cycle already, it indicates a bit of a turning point. Not necessarily a cycle high like we can see it usually spikes towards, but if we look to bear cycle lows like we could see in 2022, 2023, like we could see at the 2018, 2019 bear cycle lows, usually these capitulation events also result in many long-term holders giving up on Bitcoin. Usually we can see, due to their experience and size, they're usually pretty good at distributing at cycle highs, but everyone's susceptible to feeling pretty down, feeling pretty bearish, and potentially rotating out at the worst possible time. And some other points that I think maybe point towards this occurring is if we look to the Bitcoin funding rates, which again indicates people's positioning within the derivatives markets, we can see recently this has actually started turning negative, indicating that we're seeing people betting on further downside in the Bitcoin markets. And usually when people are betting on further downside after we've already had a big sell-off event, indicates that people are maybe getting a little bit too bearish. Now, of course, we want to see this sustained and potentially go even more negative. This is just on the coin denominated averaged 1 hour funding rate. So if we could see multiple days of very, very negative funding rates, again, that'd give me some more indications that maybe we're forming a little bit of a low in the price action. And alongside that, a very similar looking metric, the spent output profit ratio, which is looking at the actual realized profits or losses, the capitulation or euphoria that we see within the markets. We can see that this has now entered negative territory, which indicates people are now actively selling their Bitcoin at a loss, which again, you don't love to see, but what you actually do want to see is when we have these huge clusters like we saw at the $74,000, $75,000 low we set earlier in this cycle, like we did at $50,000, like we did at about 25K, like we did at the bear cycle lows. Once you have a huge amount of participants begin realizing losses on their Bitcoin positions, it again just indicates that the market is maybe due a bit of a turning point. And alongside that, if we just look at the short-term holder MVRV, the ratio between the average accumulation price, the cost basis for new market participants, and the underlying price of Bitcoin, we can see that we're actually pretty much now at levels that usually indicate at least some short-term relief. Like I said, none of these are pointing towards this being the absolute bear cycle low. Probably want to look a little bit lower towards the realized price, the 200 weekly moving average and that type of levels, to really set out a point where I'd think, right, now is a great time to be aggressively accumulating. But if we just look at this metric, what we can see is this is actually now pointing towards a point where we usually see a little bit of a relief in the Bitcoin price action. It's actually pretty much exactly at the level on the short-term holder MVRV where the bear market lows were set in 2022. And we can see there's been on multiple occasions, this has been a pretty accurate turning point throughout the Bitcoin markets to at least accumulate before a short-term mean reversion. And of course, there are instances where we go beneath this. So if we can set even lower lows, it wouldn't be entirely surprising. But like we could see with the squeeze potential, we're already at a point where I think the market is pretty exhausted and we're at least due a little bit of contraction in the markets. But one positive aspect we can look towards is the ETF cumulative flows. We're seeing a huge amount of capitulation from long-term holders, from new market participants, seeing Bitcoin drop beneath $100,000. That big psychological level was obviously a key turning point for many participants, which resulted in this near 20% almost immediate sell-off. But if you look at the ETF cumulative flows, the amount of Bitcoin held within these ETF wallets, since the highs we set in October, we can actually zoom in and see this topped out at somewhere about 1.27 million. This is excluding the GBTC outflows. So the net flows are a little bit different. We're looking at the cumulative holdings throughout all the ETFs, which topped out at about 1.27 million. And recently bottomed out at about 1.21 million, which indicates even though we've had this huge monumental sell-off in the Bitcoin price action, the ETF holders have only sold about 4 to 5% of their holdings, which again is a pretty promising indication that they're not in this just for a quick buck. We've actually seen more brutal sell-offs as Bitcoin hit $74,000, $75,000 after this sell-off. So the fact that we're not seeing a huge outflow in these ETFs is actually fairly promising. And finally, if we just go to the Bitcoin versus US dollar strength index chart, we can see this has been rallying recently, which has probably added to the recent woes that we've seen. But we're actually now at a point where I'd consider Bitcoin to potentially be at a maybe turning point. Well, I say Bitcoin, the US dollar strength index. We can see what we did in recently in about June, July, I think it was. Once we came up to this level of support, now turned resistance, this is where we actually began a more sustained sell-off where the Bitcoin price rallied to new highs, and we've once again entered this territory. Now again, we could break above this level, we could see the US dollar strength index continue to gain strength and start moving to the upside, which would probably result in a more prolonged and brutal Bitcoin bear market. But as we can see, this has been a pretty major turning point throughout the last decade or so on the US dollar strength index. So if we do come back up to this level and again start retracing, it wouldn't be surprising. It wouldn't be surprising to see the US dollar strength start moving down. And again, coincided with everything we've already seen, this would probably play into, again, the fact that Bitcoin could be at a period where we see a few weeks, maybe even a couple months, where the price action isn't going down, at the very least. Maybe it's not rallying higher, but at least it's not dropping substantially more. So I think all of these together put Bitcoin at a point where I would actually consider strategically dollar cost averaging in even more. I said in the last video, I'm not going to do that until we see a genuine Bitcoin bear market low or a sustained trend change. But right now, Bitcoin is definitely at a discount. So just to summarize, the recent sell-off we've seen in Bitcoin has been absolutely brutal, resulting in some of the most oversold conditions we've seen in recent history. And while this doesn't mean we can't go even lower, there's a very high probability, at least in my opinion, looking purely at the data, that we at least have a cool-off period in the next few weeks. Like I said, this doesn't mean that the bear market lows are in, we're not going to rally to above $100,000 and the bear market's going to continue. I still think we should be defensive with our positioning, as structurally we're definitely still within a bear cycle, as we have been since we dropped beneath $100,000. That was kind of my line in the sand of where Bitcoin enters bear cycle territory, and we can see from pretty much the day we dropped beneath that, had a sustained close beneath that price. It's just been pretty terrible, to be honest. But what we can see is, until we see that genuine bear cycle low forming, or until we see a genuine macro directional sustained trend change in the price action, as I said, we should be a little bit more defensive. These big, huge sell events are fairly common within Bitcoin bear markets. Like we could see in the previous one, we had multiple instances of being this oversold. And while they did result in a more sustained recovery and consolidationary period, they didn't indicate that the bear cycle lows had been set, and we actually moved lower on multiple occasions after that. So we should still remain cautious, but at these levels, if you're a strategic dollar cost averager, Bitcoin is definitely at a discount. And before I finish off, if I just go back to Bitcoin Magazine Pro, what we can see, this big massive banner at the top, we are having our Black Friday deal, which is giving up to 40% off of annual plans. Now, this isn't just for new subscribers. If you're not a subscriber, then this is a great chance to lock in a monumental discount on your Bitcoin Magazine Pro subscription. But if you're already an advanced subscriber, then you can actually upgrade and lock in a lifetime deal at 40% off on the annual plans. So definitely look into considering locking in one of the best deals we'll ever do on Bitcoin Magazine Pro.com to get access to the alerts, the members only charts, the newsletters, private trading view indicators, alerts, all that good stuff. You know the sales pitch, and everything else that is included with your Bitcoin Magazine Pro subscription. And as always, let me know your thoughts on whether this capitulation event is signaling a more sustained period of recovery for Bitcoin, or if this is just a pause in the big sell-off that's likely going to continue well into the end of the year and potentially into 2026 and beyond. As I said, let me know your thoughts below in the comments and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.